Welcome back. Earlier this week, the new privately owned housing starts was released. This is collected by the Census Bureau, reported on a monthly basis. And what this is going to show us is a severe decline in the buildings of 5 units or more and the very strong correlation it has to the S&P 500. The white histogram bar shows us the overall figure, new privately owned housing units that were started. This is on a year-over-year basis. The red histogram bar shows us single-family homes, such as a one-family house. The histogram bar in purple shows us 2 to 4 units, such as a townhouse for 2, 3, 4 families. And the yellow shows us the buildings of 5 units or more, larger apartment buildings. What we can see is 3 months in a row, we see declines on a year-over-year basis for those buildings with 5 units or more. And that really is the most dramatic trend that we're seeing lately. Now, this is on a year-over-year basis. The most recent figures indicate as follows. Purple, down 4%. That's the overall number, the number of units started. The red histogram bar is up 13%. That shows us single-family homes. On a year-over-year basis, from this October to last October, the number of single-family homes up 13%. 2 to 4 units, it's up 43%. The buildings with 5 units or more, larger apartment building complexes, down 32% from this October to last October. Now, one of the reasons why that's so significant is because when we see here, for example, during strong economic times, we tend to see a lot of construction, and that we would like to see optimism come back to the market, and that when that optimism is there, that we can expect to see larger construction projects. Notice most recently, though, the red line, the single family homes unit, that goes up as the yellow line, 5 units or more, is declining. So even at the moment, we can see there's a lot more capital going into the construction of smaller projects, not larger projects. Now, we see here, this is a percentage of all the construction. The yellow line shows us very simply the number of single family homes as a percentage of all construction projects. The white line is 5 units or more as a percentage of all construction projects. And what we can see is a mirror opposite relationship. When economic conditions are strong, such as 2006 and 7, the percentage of construction out there is greater or rises in 5 units or more. It takes a lot of capital and a lot of risk to build a big apartment complex. They're only going to do that during optimistic, strong markets. Conversely, when the stock market gets weak, the percentage of construction out there is more found in single family units. There's less risk out there to build one house as opposed to many homes or to a large apartment complex. Notice what's happened over the past couple months. The yellow line, single family homes spiking higher, at the same time, 5 units or more moving lower. So it really is very interesting that although the stock market looks to be strong right now, of the construction projects that are out there, a greater percentage of them and a growing percentage of them are found in single family homes and moving out of the larger projects. Now, this shows us a correlation to the S&P 500. Now, this goes back to January of 2001. It's a lot of data. And what we can see is the buildings with 5 units or more has a 73% correlation to the S&P 500. A 100% correlation means when one index moves up by 1 point, another index will move up by exactly 1 point. So 73% is very strong. There's virtually no correlation between the overall figure or single family units or even 2 to 4 unit projects. The real correlation is in the larger projects. That's a stronger correlation. And this shows us here, the white line, the buildings with 5 units or more as a percentage of all projects. The red histogram bar, or red line, I should say, is the S&P 500. And we can see during strong economic periods, when we saw the stock market go up a lot, we saw the percentage of construction projects was more found or more relevant within the 5 units or more. It represented as much as 35% of all construction out there. But conversely, and there's a little bit of a lagging effect, after the stock market went to the downside, we saw The 5 units or more only represents 10% of the overall construction. What's interesting now, while the stock market looks to be flirting with, maybe recent swing highs, that white line has fallen quite a bit. Only around 25% of all new construction that is about to begin is found in 5 units or more. And that's actually quite shocking because on the surface, the stock market looks quite strong recently. But the amount of investment capital placed into 5 units or more larger construction projects, that's very small. And that certainly is not historically a good sign. Of course, this could be also the result of higher interest rates, which compound the expenses of especially larger construction projects, but the correlation does exist. So we're going to watch this along with many other housing indicators, and we'll be sure to update you along the way with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.